So the interest rate hike has been completed and it does look bad. I'm going to show you why. There's a whole lot of very, very important things that we need to look at, and something called the dot plot, which is going to be a completely new concept to most of you out there. I know it's been new to me as well. Learned a little bit about it late last night, and you can see, at least from the crypto bubbles chart over here, kind of things are just sitting in no man's land. You have a couple of things that are red, a couple of things that have bounced, but nevertheless, let's get straight into it. There is a bunch of important things that we need to cover, and I want to summarize for those of you who may have missed it. Maybe you were asleep last night and you didn't see the meeting, but in summary, this is how it went with Chair Powell. He said that they want sufficiently restrictive rates. They want to maintain the stance for some time, meaning that this is not a sprint, it's a marathon. So be prepared, because he actually used words like, we're about 15 kilometers in to this marathon. Bear in mind that a marathon is 42 kilometers for a full marathon. So we are only maybe 1/4 of the way in, 1/3 of the way in. Then he said that there is a way to go before we get there. I want to avoid prematurely easing, committed to getting 2% inflation. Bear in mind, we around 4%. We will keep at it until the job is done. See Jackson Hole's speech for more. So very, very adamant. He spoke with a good tonality, and for that reason, the market ripped, but it was a liquidity grab. And people said, oh, it's dovish. But if you actually listen to the words that he used, they were very, very aggressive. And he is very, very serious about curbing inflation. So TED Talks Macro says here, this market reaction is not to the hike. It's on shifting in the dot plot. Considerably higher projections, for the Fed fund rate than back in June when it was last updated. And then you have Alfier says this dot plot update is massive. 12 out of the 19 FOMC members expected Fed funds between 4.5% and 5% by the end of 2023. And then he said, Fed pivot my ass. And I did bring up a tweet yesterday by Gareth Soloway, whereby Gareth said that you need to look out for that. You need to see if there's any sort of disagreement within the Fed FOMC members and what they have to say. And this is exactly it around the dot plot. So what the heck is a dot plot? Let's get into this a little bit deeper. I'm going to go through this whole thread here. Brilliant thread by Kurtan A. Shah. He says here on the Fed's policy, US Fed increased rates by 0.75% on expected lines. Will also keep reducing the balance sheet on expected lines, but equity, yields, and DXY all showed risk-off signs. The reason is the dot plot. Let me explain. So, retweet, I retweeted for him, do it for him as well. It's a great thread. So he says, question 1, what is a dot plot? So he says, it is an expectation as on today of the future interest rate movements over the next 3 years as predicted by the 19 members of the Fed. B, every dot represents each Fed member's judgment on what the future rates will be. C, if you see the dot plot below, it shows that at the end of 2022, one member is expecting the rates to be 3.75 to 4%. 8 other members are expecting the rates to be between 4 and 4.25%. 9 are expecting it to be between 4.25 and 4.5%. And 1 member is expecting the rate close to be between 4.5 and 4.75%. So bear in mind, you want that number to be lower. That shows that they're gaining control of inflation. And basically what he's saying here is that pretty much most of them do not think that it's going to get to that level. They think that things are going to get still increasingly worse. It's going to take a long, long time. So question 2, what is the importance of the dot plot? A, financial markets like more stability and fewer surprises. And that's 100% true. People don't like uncertainty in markets. Uncertainty leads to fear, which leads to people panic selling. And then that leads to ultimate capitulation. So B, the dot plot tells markets in advance where interest rates could be heading in future as per the Fed members' judgment today. C says, though the dot plot may change with each Fed's meeting, markets seem to prefer having something to work with rather than shooting in the dark. Question 3, why should you care? Over the last 2 years, the markets went up because of low interest rates, and very, very importantly, is a flood of liquidity in the market. Right now, we're going through quantitative tightening, which is, of course, the exact opposite scenario. Everything is in reverse. So you can imagine if the markets ripped as hard as they did over the past years, the exact inverse of that will likely happen. So he says, B, in a low rate regime, fixed income investing didn't look interesting, and hence liquidity chased equities and markets were up. So C, but now let me actually zoom in. This is all very, very small for me to read. Oh man. Okay, there we go. C. But now the US 2-year yield at 4% is better than the dividends yields on most stocks in the US, and hence fixed income is looking better versus stocks in the short term. D. Also, if rates keep going up, it hurts consumption. Real estate is starting to show some trouble in the US already, and this is something that we know. Real estate is not looking good. E. Stock valuations also get negatively impacted with rising yields. All of this warrants for us to track where rates are headed. So question 4, what's the current dot plot looking like? And he says, after yesterday's increase, the current rate is 3.25%. June meeting prediction was rates at 3.4% by the end of 2024. September meeting median rates are 4.4%. Scope of another 1.5% rise in rates in 2022. In summary, the interest rates are getting away from them. Inflation is getting out of control, and they definitely don't have control of this situation. It's a bad situation at the moment. C, rates are now expected to top out at 4.6 versus 3.8% as predicted in the June meeting. Inflation also does not seem to come down to 2% till 2025, guys, and hence no rate cut in 2023 as the market was expecting. And then he says, look at the median column for this previous tweet. So what he's essentially saying here is that this is going to be a real marathon. This is going to take a long time. And if you tie that in with the Bitcoin halving cycles, the next halving is meant to come, I think, is it 2000? And it's basically the peak of the bull runs are every 4 years. So if we had the last peak 2021, the next one is meant to be in 2025. And he's saying this is going to go on into 2023, which means maybe we're not going to have a bottom this year. Maybe the bottom is only going to come sometime next year, and more pain is ahead. Max pain has not been realized or felt yet. I asked myself this question back at home as well. I look at friends and family, and they're still traveling the world, going on international trips and holidays. Real pain comes, you'll start to see people traveling more locally as opposed to going overseas on international trips. So there's a lot to consider over here. He says GDP growth is reduced for 2022, 23, 24 versus the June predictions. All in all, the policy was more hawkish than the market expectations, and hence risk assets reacted negatively. So his closing comments, while India will surely outperform global markets, it's difficult to decouple completely. Okay, so he's from India, so he's just touching on his economy, but there is a lot of important things to consider there, and I want to show you the US yields as well, because this tells us everything that we need to know from a charting perspective. Everything that he says over here, we have already identified weeks ago, months ago, even within the charts. It shows that we're looking at those 4.5% levels, and I did outline that to you yesterday. I said keep your eye on the 10-year, keep your eye on the 2-year. These are very, very important charts that have upper targets of 4.5%, which is exactly what he's seeing over here from a fundamental perspective. So let's get directly into the charts over here. 3-month chart, you can see still working on that hammer candle coming towards the downside. After these statements and what's happened with the Fed, I feel more confident now that a 10 to 12K Bitcoin is inevitable. I can't see how it won't happen when there's lack of liquidity in the market and they're going to keep raising interest rates. Fed Powell actually said in his own words, I would need to try find the clip, but you can, I verified this with one of our researchers on the team. He literally said there will be 125 basis point rate hike in the months to come. So you need to be very, very careful out there. The real pain is still to come, and this market is designed for shorting. Any sort of trades that you're looking for, in my opinion, should be short trades. I don't see any points in trying to accumulate until probably later next year. So Ethereum still coming to the downside. I also feel that $743 on Ethereum is inevitable. That level is probably going to get tagged. What about the monthly chart over here? You have the MACD histogram on Bitcoin is strengthening to the downside. What about Ethereum? What does this one look like? Same story, strengthening to the downside. So not looking good on the monthly chart as well. What about Bitcoin on the weekly chart? We still have this area in the short term that I'm targeting as the $16,000 level. And I did mention to you guys that, well, if you are desperate to start to deploy your money, that would at least be a good start, because there is some small levels of support there. But if you lose 16K, you go straight to the yearly level, key yearly level at 13K. I doubt it'll stop there. It'll probably go straight into the liquidity box below, which is, of course, going to be, let's just quickly unlock that, which is going to be your 10 to 12K level below. So we can move that up. What about Ethereum on the weekly chart? How's the Bollinger Bands looking? Bollinger Bands are all squeezing in. We lost the weekly low, lost the 200 moving average, which is the purple one. Your next area of support that you're looking to is 1,124 at your 255. Anywhere between there and the lower Bollinger Band, I would expect at least some sort of a bounce. But ultimately, again, as I said, I think that 700-ish level does get tagged over there. Very, very important chart is, I outlined this yesterday in the daily candle in the newsletter, and I said that, look, first target is over here, and probably breaks that and comes into the low liquidity box. That looks like it's playing out. So this is the S&P 500 futures. It has opened. It's already open, and it's on its way down. It might even hit it this week. I think that this level can be tagged this week. And then we take it from there, small bounce, and then probably continuation leading into the end of the year towards those levels over there. Let's look at some of the other markers over here. DXY going up very, very strong, broken through that 111.29 level. Hasn't closed at these levels in over 20 years, guys. Very, very strong sign over here that you want to be in dollars as much as possible. And that's kind of my plan, right? Over the next 12 months or so, my aim is to dollar cost average into the crypto market slowly, to trade the market on the short side, shorting the market at any bounce opportunity possible, and saving as much fiat or cash as humanly possible, so that when the ultimate bottom is eventually found, which is probably going to be a slow recovery, you get V-shaped recoveries, L-shaped recoveries. There's different types. So an L-shaped recovery would look something like this. Just quickly make that blank. So you're looking for something like this. Market comes down, right? Comes down, and then L-shaped recovery is that slow consolidative move to the right. So it looks like an L. That's kind of what I'm looking for personally, and I'll plan to dollar cost average into that whole area over there. And so that's a DXY for you. What about the NASDAQ? Remember, these markets haven't opened yet, right? The NASDAQ is still closed. Look at that. This area is already going to be tagged probably today. I say to you, once you break that trend line over there, or the horizontal dotted line, there's going to be continuation into the support box at a minimum, and then we take it from there. Probable bounce from that level, and then same thing, targeting key quarterly level, which is your pre-COVID zones coming in over here. So I think it's all happening. Took time. I called this already way back at the top over here, somewhere around here. I said that, look, once we broke that level down, the bounce into here, you want to start selling, and ultimately this is coming into those zones. And these things take time, but it is playing out. VIX, you can expect, is going to definitely expand today, because the market hasn't reacted yet on this stuff. The market's only going to react later when it opens. What about the Bitcoin dominance? Let's see how that's doing. Bitcoin dominance is coming up slightly, still expecting a tag of that mid-range over there, 2-year yield. And this is what I'm talking about. Look at that. It's already at 4.1%. And here we have that near 5% mark, which is the next major target. This is moving up strongly to the upside, and I would expect continuation. I don't believe, however, by the way, that it's all going to happen in one straight line. I do think that it will have some sort of a pullback eventually, some relief, and then continuation to the upside. What about the 10-year yield? 10-year yield, okay, got a little bit of a red candle over there yesterday, but I do expect that this dotted line is going to be a support zone, so 3.49%, and then same story, continuation over here into this upper target of 4.1 to 4.6%. 30-year yield should be also showing strong signs of breaking out through what was previous resistance over here. Let's see. It is slowing down on this one a little bit. Looks like it might be rolling over, so we'll pay attention to the 30-year yield. But the ones that you want to focus on mainly for now is definitely the 2-year and the 10-year. These are the two most important ones for the stock market. Bitcoin Heikenhashi candles, let's see the coming weeks. I do expect this to close red and then probably continuation in the weeks to come. Same as what I showed you yesterday. We're looking for that L-shaped recovery, right? So something like this, you came all the way down, and then we're looking for consolidative environment between the 10 and 12K region. And this is your major accumulation zone. Play around with the dollar cost average calculator. That will give you a lot of information. Fed funds calculator showing still upside over there, so it's same unchanged based off yesterday. 3-day chart is breaking down. We'll need to see how this closes. We have, okay, I'm on a weekly. Let's just quickly change that time frame onto a 3-day over there. So you had yesterday the 3-day candle close, and it closed lower than all the other ones over here. So if you move it onto a line chart, this gives you a much better indication of what's going on. You can see these are just lower lows, right? So you have your one low over here. You have another low. Now you have another lower close over there, waiting for, if there is some sort of a bounce. Honestly, this is just an opportunity for you to sell. You do have a bit of a trend line that would be forming over there. So any push into this region at 21,200 for Bitcoin, I would definitely be a seller, short seller into that zone, looking for an ultimate breakdown of this chart to the downside and targeting, again, as you know, around that 10 to 12K level. Okay, quickly want to touch on the description below. Have a look in the description below. There is a sponsor, one of our sponsors, OKX. Oh man, I lost my screen over here. Just a second. Okay, they have a great promotion that's going on at the moment with their mystery box. If you look at this over here, all you need to do, if you register your account and you deposit $50, then you can get ETH in your mystery box. You will, it's up to a certain amount of ETH. The campaign runs until the 16th to 30th of September. I know that most of you have already signed up with OKX. So if you have, just make a small deposit there. And then this one is actually a better campaign that's going on at the moment. Fantastic over here. If you have already registered your account, let me just quickly see, is it this one over here? This one. Perfect. So if you have already a registered account, for the first 100 people that make a trade, and I think I have over 1,000 people who have signed up using the affiliation link below. For those of you, the 1,000 of you that have already signed up, if you make a trade before the end of September, which I think most of you will probably end up doing that today, and you trade more than $1,000, so $1,000 or more in spot, meaning all you need to do is buy $1,000 of Bitcoin or Ethereum, and you can literally sell it the next day. The first 100 of you will literally get $50 of Tether immediately deposited into your account. And then if you are trading leverage, for those of you who trade a volume size of $10,000, so let's say you do $1,000 and you take a 10x trade, just as an example, one trade in out, you immediately get $50. You can withdraw it. You can do whatever you want with that. So that is the OKX promotion for the leading into the end of this month. Okay, I would expect that markets will react today. Looking at Bitcoin on the Super Guppy indicator, it looks bad, guys. I also want to change this onto a line chart just to give you some perspective of what's going on over here. Have a look at this. You now have another low close. This is lower than what we had all the way back in June over there. We have these are called swing lows. So when you have lower and lower price closes, this is called a swing low. The trend is very, very strong to the downside. You cannot deny it. any bounce right now, you want to be shorting. You have to be shorting every single bounce that comes. I'm not saying blindly short, but if you get any sort of push up into around this area, as I mentioned on the other chart, at 21,300 level, so under this liquidity box over here, these are shorting opportunities. You have a lower high, which is coming in on this zone over here. So lower high, lower high, lower low, lower low, up there, short, and straight back down. And it will look exactly the same on Ethereum, I assume. Okay, Ethereum doesn't have swing lows from a macro perspective. The lowest close that we had was at $996, but I don't expect that this is going to defy the whole market. It was interesting how altcoins performed yesterday, I must be honest with you. They held up better than Bitcoin, which was quite interesting. Daily chart over here. Let's just quickly turn this off, hide the drawings, make this big for you. The only indicator that you really need right now, ask yourself how this has worked. Price stuck below. You have the EMA 12 cross below the 24, price stuck below those, governs price all the way down. A little bit choppy over here. I know most of you can't read this that well, but that's why you watch the show. I told you when we're in this environment that this is going to be a bull trap, and you had the bull flag over there. The bear flag over there. So bull trap, bear flag broke down, same pattern. Another one, choppy environment breaks down. Another one, choppy environment breaks down. And now I expect just straight continuation to the downside to play out this last leg of expansion. So same thing, anytime price pushes up into these moving averages, that is essentially a shorting opportunity for you. I expect the last leg of expansion to play out over the coming weeks. Okay, let's quickly speed through these. Bitcoin on a 4-hour chart. This is very, very worrisome. If you look at this chart over here, let's quickly expand that for you. Okay. So if you look at this chart over here, it's not a perfect descending triangle, but nevertheless, this is a descending triangle. You can see the top of the triangle coming down over here like that, and the base of the triangle over here. These have measured moves, which I can tell you will definitely take you into the critical support zone, which I've marked out between 10 and 12K. And the closer you get to the end of this triangle, the more likely you are to break down. Triangles tend to break about 70% of the way through. So if I grab the ruler and we ask ourselves, well, let's say, how far have we already gone? This has already moved quite a bit. This is probably about almost 85% mature. So I would expect that this triangle will break down very, very soon. And you can expect that new lows will come as soon as this starts to lose these levels. You are going to get new lows on Bitcoin price. So what about this chart over here? This was our long trade, which I gave you guys. This is now obviously being stopped out based off of the FOMC last night. You had a liquidity grab, so it would have stopped out the people that were short as well as the people that were long. So both sides got grabbed, big spike to the up and the downside. This is invalidated. I did tell you all to move your stop losses into slight profit or break even. So you shouldn't have lost a cent if you're on that. Now we need to reevaluate, and the reevaluation would be looking for short opportunities. So let's delete that. That is on Bitcoin. Okay, great. Same thing over here. Price stuck. This is on the 4-hour chart with the 2017 highs over here. Any push into this zone is most likely going to present a shorting opportunity. You can see you have a trend line over here, which is based off of the closes on the 4-hour chart. Forget this wick over here. This wick was a liquidity grab. So literally, I think today we'll probably have a shorting opportunity. Price pushes into the 2017 high. That is going to be your rejection zone. So grab a short thing over here. Looking at something like this, and I would be targeting, I'll be targeting much lower. I'll give you the trade on the Discord group over there, but that's kind of what you're looking at. Price it pushes into this horizontal, the horizontal as well as the diagonal descending trend line over here, and then that is your shorting opportunity. So I'm expecting something like this, and then straight back down. So guys, I think that brings us to the end. Very quickly, I wanted to touch on the Bitget grid strategy, because a lot of you asked me, I received messages on Twitter when I mentioned the grid trading strategy, and I said you can scatter your orders from about 16K all the way down to 10K. The way that you would do that is you just go over here and you go to spot, and then you'll go to spot grid trading. So you click on that over there. Then you'll go to normal grid. This is just a very quick tutorial for you guys. Normal grid, manual creation over there, and then literally lowest price. So you type in there, lowest price, you think the lowest Bitcoin is going to go is 10,000. Highest price, you think it's going to be 16,000. So you type that in over there. How many grids do you want? You can go up to 90 grids. I mean, go for all of them, whatever. Put all 90 grids over there, and then add your amounts over there, create the strategy. Let's see, enter an investment amount. Okay, I think I've already used my capital in another trade, so I don't have any capital for this trade. I'm fully entered in another grid, on a margin grid. So I can't enter this trade now, but assume that you had whatever $10,000 in here. That's exactly how you do it. You put in your lowest price, your highest price, the amount of grids that you want to enter in, and then it will stagger you into those orders with the spot position, and then choose how much you want to enter with. You can also, in the advanced settings, use a stop loss if you want. So if you do want to put a stop loss and you say, okay, well, I mean, this is spot, guys, so you'd be planning to hold it for the long term. Stop loss would be like, what if it goes down to 8K, then you think, okay, well, we're going, if we get to 8K, we're probably going to go to 4K. I'm just using that as an example. Then you put your stop loss for 8K and it will sell everything. So I think that brings us to the end. If you do want to participate in that strategy, then there is a Bitget referral link over here. If you do use my referrals, you get some sort of special treatment. You get up to $8,000 in sign-up bonuses and 15% discount on all of your trading fees. So make sure you use the links below. And that is it from me, guys. I will see you all on the next video. Let's see how the markets open today. It's going to be a super interesting day. I will see you all on the next video. Cheers for now.